All right, hey traders, this is Christian from Tribeca Trade Group, and it is Friday the 13th. And interesting Friday the 13th because I guess it kind of lived up to its hype a little bit to the downside. I don't want to say, I was going to say spooky, but that sounds so stupid. Uh, it kind of lived up to, the hype of, I guess, being a little bit yeah, I don't know. Spooky. With you had spies down. So where I'm going with this is you had spy. So you had basically most of equities were down. Small caps were up a little bit today, but there wasn't anything else that was up. Bonds got crushed, down over 2% on the day. We'll talk about that in a second. That's a big topic for the day. And gold and silver were also down. So there was really nothing. Well, I don't want to say nothing because that's not all single stocks, but the majority of those categories, major categories for the day, macro categories, were all down today. So this was kind of more of a dud day. And I think we kind of talked about that a little bit yesterday. We talked about how we were short term overbought. Some of the indicators like put to call ratio went, swung to the for pretty bullish side yesterday. So usually the markets run out of steam a little bit. It's tough to always predict like exactly when that's going to happen. I was saying that at some point midday yesterday, and then the market ended up going a little bit higher. So it's tough, but you kind of just always want to think about things in terms of risk reward. Like after a really big run in the markets, uh, greed is one of the things that is always difficult to fight with a bit because as traders and just human beings, we always want a little bit more. Um, Even though it's not always the optimal time to be taking risk. So interesting where we did stall out here a little bit, kind of the same level as yesterday. If you we'll go to the 5 minute bar here and just zoom out a little bit. But I noticed this yesterday, and this went out in my morning note that 30, right around 30.23 or 30.20. Which was the top of value for the day. We touched that at 7 o'clock this morning, and that was as high as we went. We started to sell off through the session, a little bit of a bounce back. It was kind of a herky-jerky day. The VIX kept on kind of grinding higher for the day, and then, just when things looked like they were going to kind of break down a little bit further, a little bit of buyers come in, but only pushed so far. So I would say a downward trending day from where we were pre-market. So, is that the end of the world? No, this market just kind of keeps you off kilter a little bit when you think sometimes you're going to get more continuation, especially looking at the overnight markets, which were pretty good. But this is still kind of the same theme. So let's so again, I wouldn't read too much into that. I think the put call ratio got a little bit higher. We saw some index put calling today. We saw some more put. Did I say that right? We saw some more put buying in the indexes. So things like Qs, a little bit of IWM puts this morning as well. We also saw some more software put buying. Things like MDB. I think we saw a little bit of Twilio puts as well that came up midday. So as we've said with that group, I'm kind of staying away from it for now, the software group, and let it digest. And it's going to have to back and fill on the charts. I think that group is just going to be a mess for a little bit. If it happens to bounce without me next week, so be it. But I think right now there's more interesting areas, and let that rotation kind of sit in. Let it don't. Let me say that again. That rotation, let it take place, and don't force things, right? And let buyers come back in once they think that there's value, right? So that brings. I like to look at relationship charts. This is one that I've been watching. I put this chart together. And I had it the other way. I had software. So let me explain what this is first. XSW is the equally weighted software ETF. and XTH. There could be two ETFs that you're not familiar with at all. That's fine. My point is not to trade these, just to kind of look at the relationship. But for a while, I was noticing the other way, what was happening with when software was outperforming tech hardware. So now we have this massive bounce, right, between software. Again, look at how much software has outperformed. Right, software is in the denominator here. So software outperformed hardware, and basically through the trade war. And now for a couple of years. But yeah, I mean, this just got to an extreme level, and that's why we see the bounce. So what the hell are these ETFs? Well, again, software. It's a very similar ETF to IGV, which some people look at. But if you've never heard of this XTH ETF, I don't blame you. If you look to see what's in this thing, it's kind of a combination between some semiconductors, you know, as well as just tech hardware itself. So you got Dell Technologies, Seagate, Western Digital. Again, it's equally weighted, but you could see Western Digital. Man, what a run this thing has been on since we've seen some calls. Let me get off the 5 minute. But notice that there's a version point of control taken out. Remember, there was one taken out here, and the thing moved back. So now maybe the time that this thing reverts back a little bit. I wouldn't be chasing. Definitely wouldn't be chasing this name, but like Seagate is another one. But man, these have been on. I mean, it's been on a really nice run since $40, right? STX, there is another VPOC up there at 58. But anyway, it's just kind of an interesting trend. And if you go back to that chart that I was looking at, I think that it really just got to an extreme level, right? So that's something that we've talked about a couple times this week. So I'll leave that one there. Let's go ahead and look at the performance for the week. I'll bring up the IWM chart. I do think some of these, IWM had a monster week. So let me go ahead and bring up the weekly performance. We got for 5-day, interesting. SPY, just kind of a normal week. I think it's now 3 or 4 weeks that SPY's been up. I'm trying to remember which one. I think it's 3, isn't it? The Dow is up 1.6%. You can see I've highlighted IWM up a whopping 4.1%. So again, big snapback in positioning. That's the whole thing. A lot of reasoning that I try to put together sometimes to kind of explain things, and the media does that obviously as well. But it could just be things got really extreme to make it really simple in terms of where people were positioned. Qs, they underperformed the week, only plus 0.5% or 0.5% for the week. Still up on the week, but not nearly the same outperformance as IWM. I don't have EEM and EFA highlighted, but international markets outperformed. We'll talk a little bit about EEM in a minute. TLT, which I mentioned I was going to get to, down 6.3%. So down 2.1% today. Gold, silver, I mentioned before, also down. But yeah, I mean, so this is a big catalyst too. So again, a combination of things I've talked about this week. A bunch of things probably coming to a head in terms of positioning, as well as these bonds that were super overbought for a while. I mean, this was an amazing move out of this consolidation. Did a little bit of digestion here, one more set of digestion here, and then that last move or last leg higher in the TLT. So yeah, decisively did not. I think some people were thinking that it was going to hold the 50-day moving average. Nope. And got crushed on the 50-day moving average. So filled this. There was a gap. If you look at this, keep in mind, like I these gaps. I'm not. If you look at a continuous bond future, there is no gap. So sometimes I think there's they're really significant. Sometimes I don't think that they matter, but this is the long bond again. This slash ZB, different duration. That's 30-year versus TLT is a let's see what the duration is of TLT. It's 18 years. Right, you can see that right over here, 18-year duration for TLT. So it is, you've got a whole bunch of different bonds that are in that ETF. So again, different there, but who knows? Could we be coming all the way back here? Pretty interesting. So always. So it was a really good question today in the trading room today, and as well, we've been talking about this kind of stuff all week long. But they said, is this good? Like, what does this mean for overall equities? It all depends on the group. Is my answer. This should theoretically be very good for financials because the yield curve is getting, more. It got rid of that inversion first of all, so it's not inverted anymore. The what is it, 210s that people look at, but normally that's how banks make money, right? So the more upward the yield curve is, right? So theoretically, it's pretty good for the banks. But then on the other hand, like all those areas that people have been hiding out for yield, your utilities, your REITs, even your consumer staples, those will probably see some money being taken out at some point because you don't need to hide in those yield plays when you can go into treasury bonds. You can go back into treasury bonds because they are yielding higher. Remember, as price goes down, yields go higher. Right, so that's the situation here. So yeah, so it's very difficult to say whether yields going higher is good for equities in general. I think it really depends on the group. So might as well just go to the financials. So they're kind of at. I can actually extend this line now. So it is, to me, that's kind of butting up against some resistance. That is a gap in carry. So I don't know if this is just what is it? Oh, geez, I'm forgetting my terms. I don't think this looks like a breakaway gap. I think, and I'm not sure yet if this is an exhaustion gap that we saw today. But I think carry is running into some resistance. So it's really tough to say, if you weren't positioned this week, and again, these moves happen very, very fast, whether or not you want to be adding banks here. I think if TLT continues to do what it's doing, I think there could be more run to the banks. Run to the banks. And let's go back to our performance for the week. But you're looking at a group that advanced 8% in 1 week. Even more so, which I really haven't covered this group that much. You look at the steel names, up 9.6% from those lows. Look at the VPOC taken out, by the way, in the SLX steel ETF. How does that happen, right? It's amazing. I could spend a lot of time on the version point of controls, but it's very simple. This has just been a high level of volume that has never been revisited, right? And the market just seems to remember. So interesting that this took this last one out. Now, again, there's one that lives down here, but that's far away. But man, to a T. It's amazing how that happens. A reversal right on that. Again, it doesn't always happen perfectly like that. But, you got one up here, which is still pretty far away. So that's your best performer for the week. Keep bringing up the wrong thing here. But, yeah, these are monster moves. So it's very difficult to look at this and say, banks up 8%. Do I want to go and jump into a bunch of banks here? The way that I kind of talked about this yesterday, and same thing with the small caps, because I think the small caps are also kind of at a crucial. They look, no surprise, they kind of look like the regional banks because the regional financials are the biggest weight, but you can actually draw a little bit of a trend line in here. It's not perfect, so I'm not going to draw it. Also, it helps to kind of look at the weekly chart. A lot of just trendless, right? So if this is going to continue to be trendless and bounce around like this is probably a place where you either take targets if you did, and we were long IWM earlier in the week, and I got out of it yesterday? Was it yesterday? The days are meshing together, but there's a chance that we can trend and maybe get out of this range to 166. But we've already been on a nice run. Wow, look at the volume. Big inflow, by the way, into IWM this week. So we'll see. Is this I wonder what historically, if this is how this relates, this IWM week, to other really big weeks, right? You could see we had one here, and then we fell apart after that, and then ended up going higher. So that's all kind of in the cards, right? A digestion or an inside week next week, I think would even be a positive thing. All right, so that's I know I'm going slow because it's been a long week. Retail also big week, energy big week. I feel like energy kind of faded a little bit towards the end of the week, but had a good beginning of the week. Transports, materials as well. And then what didn't perform well, your gold miners were the worst. Got crushed this week, down 6.5%. Even tech underperformed, even though Apple had a good week, despite falling today. The XLK ETF was down 40 basis points for the week, so again, underperformance there. The FANG ETF was just barely positive. Consumer discretionary, so all these areas were not where the action was this week. Even semis, fun on the worst list. Tells you how pretty strong week overall. If semis were on the worst list and they were up 2% for the week. International. So we'll talk. I mean, this is pretty amazing. European financials. Remember these guys? Up 6% for the week. That is a squeeze. And I think up even more if you go back a little bit longer than that. This is what this ETF looks like. On the weekly chart, I tweeted this chart out earlier, approaching resistance or at resistance. We'll see if it can get into the value area for the year. Other nice performers, Japan actually did very well without the FX in it, without the yen in it. Looks like a few different emerging markets. I want to talk about the EM chart. We'll talk a little bit about today's option flow. But you got South Korea, Turkey, FXI China in there, which we also saw decent sized call buying in that one. Even India did pretty well. And then you also had some other emerging markets that did not do well. Frontier markets down almost 1%. New Zealand down 3.8%. Vietnam underperformed as well. Brazil. All right, so yeah, a couple of things with option activity. I've been looking for, emerging markets had, like I said, a good week. Go back to this here. What did emerging markets do? Up 2.4%. So, here's another relationship chart. EEM versus SPY. Kind of trying to erase the trend. Here, remember, this is a really interesting channel. So if this is going to stick in the channel, and again, some of these things, they have some seasonality to them. Look at, right around last year is when emerging markets outperformed. And again, SPY sold off pretty hard in December. But you had some outperformance. So we're right at the same time of year. So could emerging markets outperform a little bit? Definitely. It's got to get through this channel first. You could draw a trend line right in here. But we are seeing some. We did see. Now this is a little bit difficult to read for EEM. There was what looked like a straddle bot December 44 calls and puts. So really difficult to know what the hell they're doing there. Maybe they did want to buy both, even though the puts cost a lot more. It's a $9.4 million trade on the put side. And then they also bought some 42 and a half puts, 42 and a half calls. That's a $4.7 million order. So I don't know if these orders go together. They did go up like about an hour different time. These were also bought, or this was also a spread that went up. Could be rolling. This one looks like a roll of September calls to October. Also, FXI, wanted just to cover that one. Again, covering something a little bit different here in terms of option activity. But I've been kind of looking to see if, speaking just in terms of the ETF fund flows that I look at on a daily basis, there's been nothing in terms of inflows. A lot of emerging markets saw outflows a couple months ago. We've not seen really any money return to this group. And the group of ETFs that I kind of look at is, of course, EEM, VWO, and IEMG. And IEMG actually saw the first outflows that ETF has ever seen a couple months back. But yeah, you could see, this looks like they're probably taking this off. But nice, this is a $1 million trade in premium. October 41 and a half calls. And then we saw a little bit more, right? They paid $115 for those. And then I saw some that went up here, same strike, for $118. Another $4,000. That's another $500,000 trade. A little bit more even in here, too. That probably went with the first order. But yeah, some positioning in the FXI ETF, which also kind of just, they don't look like they're in trends as of yet, but it looks like somebody's positioning here. All right, so that's pretty much everything that I wanted to cover in today's. Again, these days are, as I'll say it again, are a little bit tricky because as fast as the market was moving all week long, then all of a sudden you get like one of these digestion days, and where we're just kind of trickle down through the day. But again, that's not a horrible thing. It kind of takes away from, it burns off those short-term overbought levels. It also, the put-call ratio also kind of resets itself back from being in bullish territory. So, let's take it one day at a time and just, concentrate on your risk positioning and not getting over the tips of your skis. All right, guys, have a great weekend. See you on Monday. Again, if you're a member of Tribeca Trade Group, we'll put together a nice watch list for the weekend and get ready for next week. All right, guys, have a great night. See you tomorrow. See you Monday.